Greetings, welcome, thanks for being here. My name is Russell Paul Arthur and I am here to empower you. Empower you to create your best life as a sovereign man or woman. And in this video presentation, we are going to examine an aspect of sovereignty. Examine how it is possible for you to gain sovereignty over the financial and material wealth that you own and hold in your life, so that your wealth is secured and protected, is free and independent from the tax liabilities of the public domain. And in particular, we are going to place inheritance tax under the spotlight, because inheritance tax is the one single tax that will wipe a fortune off your wealth, that reduces your wealth by 40% at the end of your lifetime. And at the end of this video, you will have a clear understanding on what you can do as a sovereign man or woman to secure and protect your wealth from inheritance tax. And before we do get started, what follows is not legal advice, not financial advice, and not tax advice. I'm not advising you to do anything in a commercial, corporate, or legal sense. I'm speaking to you in a private manner. I'm simply stating facts that have derived from research where you can confirm what I am saying. So let's get started. Right now, you operate as a citizen in a public domain, and you operate with a public estate. In law, an estate refers to the value of your life and property. In lawful terms, your estate is everything that you earn, own, owe, and control in your personal name. This includes your property, assets, savings, investments, finances, debts, and everything else that has a positive or negative value. The value of your life and property, your entire net worth, is your estate. And you have a public estate because your estate is registered in the public domain and incorporated into a public trust arrangement with the Crown and State. You currently operate in the public domain as a registered citizen of the state. The citizen is a corporate legal entity, a character of law and franchise of the state. And your actual life and livelihood as a living man or woman is attached to the citizen through legal joinder, and where your actual life and livelihood is the bonded surety for everything that you do in the public that is registered in the name of the citizen. This means you are legally bound to all the legislations, statutes, acts, rules, regulations, and codes that are designed to control and extort value from your life. In particular, your life is in bondage to all the tax codes that are imposed and enforced onto your life by the Crown and State. And I say imposed and enforced because A, you do not have a say or choice in these tax codes, and B, if you do not comply with these tax codes, you will be persecuted and punished by the law enforcement and courts of the Crown and State. In this arrangement that I've just described, you are not sovereign. You do not have freedom and independence. Your wealth is exposed and liable to the dictates and impositions of another authority that wants to tax your wealth, that wants to extort value from your life. And in particular, you and your estate is liable to pay inheritance tax. Inheritance tax is where the heirs to your estate, those who receive your estate when you pass away, will pay a substantial amount of tax to inherit your estate. Inheritance tax is a significant liability and loss. So how does inheritance tax diminish the value of your estate? When you die, your estate will be passed along to your heirs. The heirs to your estate are typically your family members, those who have a paramount claim and right to receive your estate. This will be your spouse, civil partner or children, and anyone else that can prove they have a legitimate claim to your estate. When you pass away, the matters of your estate will be dealt with in a probate court. The heirs to your estate must go through a probate court process to claim your estate, where the content and value of your estate, your property, assets, interests and money will be divided and distributed between those who have a rightful claim to your estate. During the probate process, your estate will undergo a final tax return, and this is when the Inland Revenue Service will calculate and demand an inheritance tax is paid to the Treasury of the Crown and State. In the United Kingdom, the inheritance tax is charged at a 40% rate, and there is a £325,000 threshold before this 40% rate of inheritance tax is applied to your estate. This means the 40% rate only applies to your estate on everything that is over and above the value of £325,000. Your estate therefore will be taxed at 40% on anything above the £325,000 threshold. For example, when you pass away, if you was to leave behind a £900,000 property, once the 325 inheritance threshold has been accounted for, there will be a 40% inheritance tax to pay on the 575 balance of a £900,000 property. This means £230,000 of inheritance tax would be paid on a property worth £900,000. That is a huge chunk of your wealth handed over to the taxman. Now, if you do your own research, there are several ways that you can legally avoid inheritance tax when you get the affairs of your estate structured and in order. Now, typically, when you leave behind your estate to a spouse or civil partner, they are exempt from paying inheritance tax, which on the face of it sounds great. However, when your spouse or civil partner passes away, the estate is then likely to be passed along to your offspring, where the inheritance tax is applicable. At some point along the family lineage, when an estate passes over to offspring, the inheritance tax will be due. And it's important for you to note that inheritance tax exemption does not apply to a casual or cohabitating partners. It only applies to a spouse or civil partner where there is a registration and certificate that is issued and endorsed by the state. Now, here is a good way to avoid inheritance tax when you pass away. You can leave behind your estate, in whole or in part, to a registered charity. Registered charities are exempt from paying inheritance tax. This means if you donate property, assets, investments or funds to a charity, and where that donation is made at the point of your death as a last will and testament, your donation will be deducted from any final tax calculations made against your estate. This means inheritance tax is not charged against any value that you donate to a registered charity. Needless to say, if you choose to donate your estate to a registered charity so you can legally avoid inheritance tax, it would make sense and it would be beneficial for that charity to be an organisation that you create, where your family members, the people that you leave behind, have an equity stake and controlling interest in that charity. However, it is important for you to know that a charity can only utilise donations for non-commercial activities where the funds are used for charitable causes. Another way for you to legally avoid inheritance tax is when you secure your property in property trusts or land trusts. This means you would relinquish personal ownership of any property or land that you currently own and hold in your personal name. as you place that property or land into a trust arrangement, where the trust is a lawful entity that owns and holds the property or land, and where you become the beneficiary of that trust. In a trust arrangement, inheritance tax is not applicable because inheritance does not take place when you pass away. In a trust arrangement, the property or land has already been structured into a lawful entity that owns and holds the property or land. Your family members do not inherit the property or land. They do not take personal ownership of the property or land. Instead, they become the new beneficiaries of the trust arrangement. However, trusts are liable for tax. Trusts are charged with transfer tax, capital gains tax, income tax, and various other trust taxes. Here is another way that you can legally avoid inheritance tax. You can gift your property to someone. When you gift property, when you gift something of value, there is no tax applicable. However, the Inland Revenue has applied certain rules to the gifting of property. If you die within 7 years of gifting the property, the inheritance tax will apply. When you gift a property to someone, you can no longer possess and use that property unless you have a contract in place with the new owner of the property, where you pay some type of consideration to possess and use the property. Now, those three methods that you can use to legally avoid inheritance tax, of placing value into a registered charity, of placing value into a trust arrangement, or gifting value to someone, only applies to a citizen of the state that operates with a public estate, and where that public estate is subject to and liable for all the tax codes and rules that are attached to the estate. However, there is another way where you as a sovereign man or woman can lawfully avoid inheritance tax. You can lawfully avoid inheritance tax when you separate yourself from the citizen, when you achieve personal sovereignty, and when you convert a public estate into a private estate. Converting a public estate into a private estate is where you convey and restructure the value and rights of your property, assets, interests, and money into a private estate arrangement. A private estate is a unique, lawful entity with private and sovereign status and standing. A private estate operates with a charitable and missionary nature and function. A private estate exists free and independent from the Crown, state, and public domain, and can own and hold wealth within its own private and sovereign venue and jurisdiction. This means when you restructure your wealth into a private estate, your wealth is separate and immune from all the tax codes, rules, and liabilities of the public domain. However, to achieve sovereignty over your wealth, you must do the work to get the results. You must invest the time to complete the lawful procedures, where you gradually convert your public estate into a private estate. You must rescind and cancel citizenship. You must unshackle from bondage to the corporate legal world of the Crown and state. You must reclaim and reassert your natural freedoms and rights to operate in this world as a sovereign man or woman with a private estate. This is exactly what we teach our private members to do in the Grace Sovereignty Academy. We teach the knowledge, skills, and lawful procedures that allows our members to achieve personal sovereignty and establish a private estate to safeguard their wealth so that they have wealth sovereignty. Doing so in a lawful and peaceful manner. Doing so without causing any disruption, controversy, or conflict with the Crown, state, or public domain. Because as sovereign men and women, freedom peace and prosperity is what we are all about. And the question I pose you is this: what have you done to safeguard your wealth? Are you ready to take practical steps to restructure your life as a sovereign so that you can benefit from true freedom and independence? And listen, if you have found this presentation helpful, if you would like to learn more about how you can achieve sovereignty, how you can restructure your wealth into a private estate and lead yourself and your loved ones into a new paradigm of sovereignty, and I'm talking about sovereign freedom, sovereign peace, and sovereign prosperity, then I invite you to get connected with me. Sovereignty is my mission and passion. I'm the man to guide you and support you when it comes to you achieving sovereignty in your life. And that leaves me to say thanks for watching, sending you my blessings of good fortune and great health.